you were bang on when it came to kind of seeing the direction of interest rate cuts this year. You never really thought we were going to get 5 or 6. You said September was when you would see one. Now the market is aligned with what you had said many months ago.
How about that, right? I said it in December. Now the whole world believes they're not going to cut today and they're going to cut September. So they basically were saying, yeah,
what about
next
year? What about next year? You think about the pace of cuts moving past September, the election coming up. A lot of people are thinking about what it would mean for Trump versus Kamala Harris to take the office, whether those tariff policies will be inflationary going into next year. How much room will there really be to cut rates going into 2025?
I think both candidates, would like to cut rates. So that's good for the bond business, right? When you have everybody running, you have 100% coverage of people in politics want to cut rates, right? So I think we get a September cut. I think that's in the cards for sure. And you saw Germany had negative growth. I mean, negative growth from such a big economy like that is going to drive all the central bankers who are now looking to cut. All right, so it's really, that's sort of the word out there now, cuts. So September, I think the market's building in a 100% probability of a cut now. How about that? That's a good percentage, 100%.
There you go.
Sort of it. I think there'll be some cuts next year. But you have to remember, zero is just not a thing. Okay, it was a manufactured thing to get us out of the great financial crisis, right? So it's just, and the pandemic, it's just not a thing. So I think a couple of cuts, maybe. In the mid-4s is a reasonable rate for us to live and breathe in. So I think 2 or 3 cuts next year. I'd say 2 cuts next year, 1 in September. And that's the whole thing. It's not, unfortunately, it's not that exciting. It's not 7 cuts and then 7 hikes and then
all the way back
cuts.
to zero. It's just not happening.
Yeah, no chance. Zero chance. We have a good economy. We have good interest rates. For the Fed, it's their tool, right? If they, at zero, what tool do you have? Right? You can't, what did they do? Quantitative easing. You're like, how is that even on the menu? What, they buy all the bonds of America? But you have to remember, as the Fed runs off its balance sheet, okay, that means I'm not buying bonds, you are. That's tightening. It's like, it's cutting, it's cutting off your credit card for the economy.